Everyone thinks the rich make their money by buying expensive houses, luxury cars, or the hottest stocks. But the truth is, by the time everyone notices those purchases, the biggest opportunities have already passed. The real wealth is often built much earlier, long before the headlines, long before social media starts talking about it, and long before the average investor pays attention. That made me wonder. If wealthy investors consistently stay ahead of the crowd, what are they actually buying before everyone else? So I spent time researching long-term investment trends, reading reports from major financial institutions, and looking at where experienced investors are quietly positioning themselves. What I found wasn't a secret stock or a guaranteed shortcut to becoming rich. It was something much more valuable. A completely different way of thinking about wealth. Imagine two friends, Jake and Ryan. Both have $20,000 to invest. Jake checks the market every morning. He watches financial influencers. He follows every trending stock. Every week, he hears about a new once-in-a-lifetime opportunity. Ryan does something different. Instead of asking, "What's popular today?" he asks, "What will still be important 10 years from now?" At first, Jake looks like the smarter investor. Some of his investments double. Others crash. He's constantly buying and selling. Ryan's portfolio hardly changes. It even looks boring. But 5 years later, everything changes. Jake spent years chasing excitement. Ryan spent years owning businesses and industries that quietly became more valuable. That's the difference between following attention and following long-term trends. And that's exactly where the first opportunity begins. Most people think artificial intelligence is all about chatbots, image generators, and futuristic robots. But that's only what we see. Behind every AI tool is something much bigger. Think about electricity. When electricity changed the world, the biggest fortunes weren't made only by selling light bulbs. They were made by building the infrastructure that powered everything else. The same thing is happening with AI. Every AI model needs enormous computing power. That means powerful computer chips, massive data centers, advanced networking equipment, cooling systems, reliable electricity. These businesses rarely become viral on social media. But they're becoming increasingly important as AI expands into healthcare, finance, manufacturing, education, and almost every major industry. Many professional investors aren't just asking, which AI app will win? They're asking, who supplies every company building AI? It's the classic picks and shovels strategy. During a gold rush, many fortunes were made by selling tools to the miners. Not by mining the gold itself. But AI infrastructure isn't the only trend creating opportunities. There's another industry that quietly benefits no matter which technology wins. That industry is energy. At first, energy sounds boring. It's not flashy. It doesn't dominate social media. But think about this. Every electric vehicle needs electricity. Every AI data center needs electricity. Cloud computing needs electricity. Factories need electricity. Even the devices you're watching this video on need electricity. As technology grows, the demand for power grows with it. Imagine building hundreds of new digital factories across the country. Someone has to keep them running every hour of every day. That's why many long-term investors are paying close attention to companies involved in energy production, electricity infrastructure, and power distribution. This doesn't mean every energy company is a great investment. Far from it. But wealthy investors often focus on businesses that benefit from broad economic trends instead of trying to predict which single technology will dominate. It's a different mindset. Instead of betting on one winner, they're investing in what every winner depends on. And that same thinking appears again in another overlooked area. Surprisingly, many wealthy investors aren't obsessed with finding the fastest growing company. Instead, they often prefer businesses that consistently generate cash. Imagine owning a company that provides software to thousands of businesses every month. Customers keep paying because they rely on the service. Or think about essential businesses that people continue using regardless of whether the economy is booming or slowing down. These businesses may never become exciting headlines, but they produce something extremely valuable: reliable cash flow. Consistency may not look impressive in 1 year, but over 10 or 20 years, it becomes incredibly powerful. Think of it like planting an apple tree. You don't expect fruit tomorrow, but once the tree matures, it produces season after season. That's how many durable businesses create wealth. Slowly, predictably, year after year. And while everyone else is searching for the next big thing, long-term investors quietly appreciate the power of consistency. But perhaps the most valuable asset isn't something you can buy on a stock exchange. It's yourself. This might sound simple, but it's one of the biggest differences between wealthy people and everyone else. They constantly invest in skills, communication, leadership, negotiation, technology, problem solving, financial education. These skills don't disappear during a market crash. Nobody can take them away. In fact, during periods of economic change, they often become even more valuable. The better your skills become, the better your decisions become. And better decisions usually lead to better financial outcomes. Many successful people spend thousands of dollars every year learning from books, courses, mentors, and real-world experience. Not because education guarantees success, but because every new skill increases the number of opportunities available to them. Sometimes, the highest return investment isn't a stock. It's improving the person making the investment decisions. Finally, there's one asset that almost everyone underestimates: time. Most people think successful investing is about finding the perfect opportunity. But history tells a different story. Imagine two investors. Both invest the same amount every month. One starts at age 25. The other waits until 35. Even if they invest the same monthly amount, the person who started earlier often ends up with significantly more wealth. Why? Because compound growth needs one thing above everything else: time. Compounding feels slow in the beginning, almost invisible. Then, little by little, growth starts building on previous growth. Eventually, the results become difficult to ignore. That's why many wealthy investors aren't trying to get rich overnight. They're trying to stay invested for decades. Patience may not be exciting, but it has quietly built countless fortunes. So what connects all of these assets? Artificial intelligence, energy, reliable businesses, skills, time. The answer isn't the assets themselves. It's perspective. Most people ask, what's making money today? Wealthy investors ask, what will still matter 10 years from now? That one question changes everything. Because wealth usually isn't created by reacting to headlines. It's created by preparing before those headlines exist. Nobody can predict the future perfectly. Markets will rise. Markets will fall. New technologies will appear. Old industries will disappear. But one principle has remained true throughout history. The people who think long-term usually make better decisions than the people who chase short-term excitement. So the next time you hear about the latest investment trend, pause for a moment. Instead of asking what's popular today, ask what's becoming essential for tomorrow. That single mindset shift may become one of the most valuable investments you ever make. If you enjoyed this video, make sure to subscribe for more insights on investing, wealth building, and the future of money. And if you want to learn how the world's best investors think before everyone else catches on, check out the next video on your screen. It might completely change the way you look at building wealth.